Hello everyone, this is Elsie. Welcome back to my channel. Guys, in today's video, I'm gonna talk about how to prepare financial statement. I have decided to share this content as an introductory information for beginners. Since I have been into business in the past, I know and I understand how important financial statements are for the business. Guys, income statement is one of the major financial statements that businesses issued alongside the balance sheet and cash flow statement. Guys, income statement shows us all the business income, expenses, and margins for a given period of time. It shows us if the business is making profit or loss. It shows us how much a business has generated during a reporting period of time and the amount of expenses it has incurred. So let's get started. Guys, one importance of preparing our income statement is we can always use it in filing our income tax return. Guys, the first step on how to prepare an income statement is determine a reporting period like monthly, quarterly, or annually. So the first thing to do is to type our heading. Let's name it XYZ Product Company Inc. Our title will be income statement. Guys, income statement are also called with the following name: profit and loss statement, statement of financial performance, consolidated statement of earnings, statement of operation, earnings report, or simply call it income statement. So now in this example, we are doing an annual report. So let's type for the year ended December 31, 2020. So next step is number 2, calculate revenues during the reporting period. So to calculate revenues, we add all the money that we have received, every amount that we brought in to the operation of the business. The total or summation of it represent revenues, or we call it sales. Let's make it 100. So the number 3 step on how to prepare income statement is determine cost of goods sold. So to determine cost of goods sold, we have to add all direct materials, direct labor, and overhead expenses that we have incurred during the operation of the business. If ever this is not your first year of operation, remember to include inventories. Remember that ending inventories of the previous year will be the beginning inventories of the preceding year. So in this example, we are reporting a first year operation, so we have no inventories to report. So what we're gonna do is to add all direct materials, direct labor, and the overhead expense that we incurred on the operation of the business and deduct it from our revenues, and the result will be our gross margin. Number 4 is to calculate gross margin or gross income. To calculate gross margin or gross income, you deduct cost of goods sold total from revenues or sales total. This calculation gonna gives us the gross margin or gross income. Gross margin or gross income represent the gross amount you earned from the operation of your business. So let's say total revenue or sales is 100,000. Deduct from it total cost of goods sold, which is 25,000. The result of 75,000 is the gross margin or gross. Number 5, deduct operating expenses. So during the operation of the business, we also incurred some operating expenses like selling expenses, administrative expenses, and depreciation and mortgage. Selling expenses may be advertising, marketing, or promotion. Administrative expenses may be salaries and wages, rent, insurance, travel expenses, and sometimes depreciation and mortgage along with other operational expenses. So let's say we have a selling expense of 10,000, administrative expense of 10,000, Depreciation and mortgage, 5,000. So total, 25,000. So let's deduct the 25,000 from the gross margin of 75,000. The result's gonna give us a 50,000 income before tax. It is also common for businesses to report other income and other expenses like interest income and interest expense, 5,000. And so let's say interest income is 5,000 and interest expense is 10,000. And remember that interest expense is negative. We have to deduct the expense from the income. The result is gonna be an amount of 45,000. So number 6 is calculate our income. So deduct the selling expenses. So deduct the selling and administrative expenses from our gross income. The result will be our income before tax. Number 7, include taxes. So in number 7, include income taxes. So what we do is to multiply our income before tax amount to our applicable tax rate. And then we will deduct our interest expense, which is 5,000. So deduct the operating expenses from our gross margin or gross. So after deducting the operating expenses from our gross income, we will arrive to our operating income of 50,000. Look at the statement. We have a revenue here. So sales revenue is 100,000. Cost of goods sold is 25,000. We deduct it. So we deduct the amount of cost of goods sold from our sales revenue. So 100 minus 100,000 minus 25,000 equals 75,000. And then let's deduct all operating expenses. So we have here so let's deduct all our operating expenses, and we have here direct labor. So let's talk about the complete income statements for a better understanding. So financial statement always have their headings. So we have our heading here is XYZ Product Company Inc. So we have a title of income statement. And since we are reporting an annual report, we type here for the year ended December 31, 2020. So we have a gross sale. We have a revenue sale of 100,000. So from our revenue sales, we deduct our cost of goods sold of 25,000, and we will arrive at a gross margin or gross income of 75,000. So our gross margin is 75,000. Let's deduct our operating expenses of let's deduct our operating expense amounting to 25,000. We will arrive at an operating income amounting to 50,000. From our operating income amounting to 50,000, we will deduct our other expense, which is 5,000, and we will arrive to our income before tax amounting to 45,000. After that, our applicable rate is 35%. So let's apply that to our income before tax. So let's apply our 35% applicable rate to our income before tax, and we arrive at an amount of 15,750. We deduct this amount from our income before tax of 45,000. So the result is our net income amounting to 29,250. Guys, in preparing a financial statement, we have these 4 items to remember. It says revenues, expenses, gains, and losses. Revenues represents all cash and non-cash that we receive into the business. Everything that we brought in from the business operation. We commonly call it sales. Expenses represents cash or non-cash that we shelled out or expended for the operation of the business. It's commonly called operating expenses or operational expenses. Gains represents all the money that we receive, everything that we brought in from the business operation. It is commonly called income or profit. Loss represents all the money that we shelled out or overspent from the business operation. Losses usually occurs when we diverse capital or when our business failed to bring a reasonable return of investment. Always remember that when we do business, it has to be sustainable and could make a reasonable return of investment. That's it, guys. This is it, guys. I hope you enjoyed and like it. Thank you for watching. I hope this video could help, especially for those who gonna be filing their income tax return this year, who needs financial statement as an attachment. And once again, guys, shout out to all of you. And to my super chatters, shout out. Shout out to you, Dandan in Canada, for your generosity and support. Shout out to you, Michaela's Word, for your generosity and support as well. And shout out Ingrid's channel. I hope, correct me if I'm wrong with my pronunciation to your name. Yeah, Ingrid's channel, for your support and generosity as well. Vloggers, guys, they have wonderful channels and very supportive. Thank you for watching, and I hope to see you again on my next video.